we can get to Pashupati. Hi, Pashupati. It's a bit of a perfect storm, right, today. We have the rupee, we have a corporate deal breaking, and then we have, our own story on what the exchanges or what the regulator, rather, may do to tighten up some of these norms and curb speculation, which continues to be one of the biggest talking points, I think, from SEBI's perspective. But first up, on this whole rupee business, Pashupati, would you link today's fall to the slide in the currency? I mean, how should we read life at rupee at 90?
Well, we've seen FPIs and OFSs coming, quite rigorously, and that has seen money going out of the country at 86, 87, 88. So, it's continuing to go out. I'm not seeing money coming in. And, somebody made a comment to me that on all the new issues, they should put in block letters on the front page that the OFS is how big versus the issue being that big, because people are feeling that the OFSs are now getting bigger than the new money for the company. So obviously these things are all telling a toll, but I don't think the story ends there, because the story also ends with the uncertainty of the trade, tariffs with the US, the things that are going on in US, particularly in AI, and what that means for our IT companies. Today they've turned up, but I think that they've been hammered quite a lot in the last few days, and will, in my opinion, continue to be hammered. So, it is sort of cautious times, I would say. Surabhi?
Right, Pashupati, it's cautious times, but at the same time, the companies that are coming out with their paper, OFS or fresh, whatever be the case, it's the sectors are sunrise. The growth runway is fairly long, and oftentimes the ones who are offering their stake aren't offering the full stake. So they are, holding on to some, and in many cases, they're also doubling down in the anchor book after what they've invested earlier. What do you make of that?
No, those are the ones who are here to stay. But the reality is it is quite, what I'm seeing is a lot of outside money going back. And, maybe it's the US that's attractive, maybe it's Europe that's attractive, maybe it's another set of countries. But basically I'm seeing, we've had a really vibrant market, and so it is an opportunity to walk away. Plus there are mumblings from China that things are turning around over there. So a lot of our money will probably, take a breather and go into China. So, India funds will move to China funds, and India and Asian funds will shift from India to China. And I think I'm seeing a little bit of that as well.
Okay. All right. Pashupati, just hold on. We just want to address this story that Yash has broken a while back on fresh curbs to, limit speculation in the F&O market, particularly when it comes to retail investors. Yash, explain this to us, because when you want to dabble in F&O, you always need to cuff up margin. That margin requirements are always there, and there's been enough speculation on whether those margin requirements also might go up. But you're saying that there could be a whole new entry criteria, whether I, as an investor, can enter in the F&O market or not. So just explain this.
Well, exactly. The main intention from market regulator SEBI, as we understand at the pretext of it, is to safeguard retail investors when it comes to the risks and, risks which they don't understand of the derivatives market. What we've been given to understand, and it's been some time, that market regulator is discussing the concept of eligibility criteria itself, which essentially, restricts or allows an individual to trade into derivatives market. Under the eligibility criteria, the most discussed point right now amongst, of course, SEBI is to consider, making an individual furnish his equity exposure. This could be through mutual funds, this could be through PMS, this could be through direct equity exposure or SIPs. All put together, what is the equity exposure that a particular individual has, and only if that equity exposure is beyond a threshold which is likely to be decided by SEBI, then he would be eligible to trade into equity derivatives. This is currently being discussed so far, of course, within the boundaries of market regulator SEBI. What we understand is that this soon could be discussed with stock exchanges in terms of how to really decide this particular threshold. What will be this threshold, which, if crossed by the equity exposure of an individual, he would be allowed to trade into equity derivatives. And then there could be a consultation paper on the eligibility criteria for individuals to trade into equity derivatives.
All right, we take that point. Like we said, hedging, speculation and arbitrage hedging and arbitrage stay. Speculation is something that SEBI wants to curtail. Will be very interesting, Surbhi, because the point that you made, there is margin which is required upfront for trading in F&O already. My sense would be logically, I mean, from an exchange standpoint, this will obviously be negative because a large part of the volumes, a large part of the revenues come in for the exchanges, and that's something that we're seeing on the share prices as well. Yeah. But what would be theoretically important to know when you're talking about the threshold is that for options there is something known as a delta, right? The rate at which the price of the option changes basis the price of the underlying. On that they can put that threshold. Delta could be that threshold. But for futures where the delta is 1, where the underlying changes just the way the futures changes, how do we put that threshold, and what threshold is good enough or what isn't good enough is something that'll be a very interesting one. So just as a market observer, this will be a very interesting conversation to watch if at all that comes by.
I hope it's as nuanced as what you're saying, that it's on certain positions or the delta or certain parameters. I hope it's not a blanket thing, because I can already sense the debates raging on social media. If it's a blanket entry threshold that Mangalam should have at least a 1 crore cash portfolio.
Not in this lifetime, for sure.
Cash market portfolio before he can do F&O. We don't trade anyway, so that was just a, in a lighter vein. But essentially, we need to see how this plays out. Pashupati, let's get your sense. Capital market stocks. In the earlier part of the year, they were very good wealth creators, and all this regulatory turbulence. I mean, do you still like anything? Do you own anything?
We obviously own. We're not exiting the market. We have to have something. But it's been tough. And I think that, you can count the number of people who have made money this year on the fingers of 2 hands or maybe even 1 hand. Because I saw an article with all our big friends who have large portfolios, and all of them are in the red this year. So it's not a good situation. And, if you don't make money, you're going to run away from the market. And I think we're getting to that point where people are getting a little bit sort of antsy, I would say the right word is, and they're moving away.
You have any buy tips, Pashupati, before we let you go? Anything to buy in this?
Sounding very pessimistic. Pashupati pessimistic. That's what we call you today.
Well, no, I don't think that. I think there are obviously going to be values. See, I actually believe that the government is going to continue to spend, and we have to be in infrastructure, but it's not going to be a here and now deal. They are going to spend, they're going to spend. We have to be in cement, we have to be in steel, we have to be in aluminum, precious metals. Those are the stocks. That's the half of the index that's going to drive the whole market. Now, we'll go up and down, but the reality is we need all these commodities for our growth. The government is fueling it. Private companies are also coming into the space. So that's where we have to just buy and pray, I would say.
All right, buy and pray. It sounds like some of that is rubbing off on the markets right now. The Nifty has reclaimed that 26,000 mark. So that's the headline for this hour. Thank you, Pashupati, for joining in. You put some pessimism, but you put some optimism as well. The Nifty is actually just about breaking into the green, as is the Sensex. The Nifty Bank, when we just, spoke about 5-7 minutes ago, the HDFC Bank stock doing extremely well. The Nifty Bank is now fair and square in the green, almost 120 points up in the green. HDFC Bank is the one which has crossed the 4-digit mark in today's trading session, taking the Nifty Bank higher. The Sensex is in the green, the Nifty just about 35 points in the red.